Hi, thank you for watching. We're going to talk about pay as you earn, also known as PAYE. Before we get on to that, if I could please ask you to take a moment to subscribe to our YouTube channel and turn on the new notifications. This will mean that you can easily refer back to this information if you need to, as well as accessing the other information that we have available on taxes and the aspects of running your small business. And you will also be notified of new content as we upload it. Thank you. Back to PAYE. So PAYE is a system that employers use to deduct your tax and other liabilities before your wages are paid to you. This means that on your payslip and what you receive in your bank will be your net pay, and all income tax, national insurance or pension liabilities your employer will pay to the appropriate place directly on your behalf. You won't have to worry about it at all. So PAYE is just for employees. So if you're self-employed and trading as a sole trader, then PAYE won't apply to you. You'll need to submit a self-assessment tax return, and that's how your liability will be calculated. If you're self-employed, but you're operating as a limited company and employed by your limited company, then it may be that the PAYE scheme applies to you. In any case, even if you're an employer, it's good practice to be able to know about the PAYE system in order that you can answer any questions that are raised by your employees. So we looked in a different video about income tax, and there we looked at how income tax is cumulative. What that means is that all of your income from all sources is added together, and then you are assessed for your total liability. Some sources of income, such as your employed income, will be taxed at source, and the money will be paid directly to HMRC. So once your liability is known, this will all be taken into account. If the correct amount of tax isn't deducted from your wages throughout the year, then at the end of the year, HMRC will assess an under or an overpayment that may be due. So the way that an employer knows how much tax to deduct from your wages by what we call a tax code. So it's really important to understand what your tax code means and enough to know whether the tax code that's been applied is correct for you. And this will ensure that the correct tax is deducted. Your tax code is issued to your employer by HMRC, and you should receive a copy with a detailed breakdown of how it's been calculated if it's not a standard tax code for the year. And as I mentioned, the tax code will tell your employer how much tax that they need to deduct. If there's any issues, you will need to contact HMRC directly, as your employer is only able to use the tax code that they have received from HMRC. So if you believe that it's not correct, you will need to contact HMRC and ask them to reissue a new code if there is any inaccuracies. These days, we operate a system known as real-time information for payroll. And what that means is that your employer will tell HMRC every time they make a payment, they'll tell them how much they've paid you and how much tax, national insurance and pensions have been deducted. At the end of the tax year, your employer will give you a P60, which is in effect a summary of the total amount that you've earned throughout the year, as well as how much tax has been deducted. And if you leave your employment throughout the tax year, then your employer will give you a P45, which is a summary of your pay to date, as well as how much tax has been deducted from that income. If you then go on to start a new job, you should give them the P45, which will ensure that your total tax paid throughout the year will be correct. Your personal allowance that you're allowed to earn without paying tax for the year will be split equally across the pay periods. So the P45 will ensure there's no gaps or overlaps in the use of your personal allowance. Having said that, if you leave your employment partway through a year and you don't start new employment, there is a possibility that you may have overpaid tax, and you should therefore contact HMRC to inquire about this. There are some instances where your employer may not be able to calculate your tax liability on a cumulative basis. For example, if they don't know how much other income you've earned within a year, if you've not received a P45, for example, or if you've previously been self-employed. In this instance, your employer will need to calculate your tax liability for each pay period in isolation, i.e. with no reference to the rest of the income for the rest of the tax year. You can tell if this is happening because the tax code on your payslip will have maybe W1 for week 1 or M1 for month 1, or simply an X at the end of it. This is because this method is known as the week 1, month 1 method. If this does happen, it's really important at the end of the tax year to ensure that your tax is being correctly deducted across the whole year. Ultimately, HMRC should pick up any errors, but this may take some time before they review. So you should review yourself as long as you've got enough understanding of how your tax has been calculated. For many employees, your tax code will in effect represent your personal allowance, and HMRC should send you a letter to explain how it's been calculated. There are several instances and reasons why your tax code may be updated. So, for example, if you start a second job or start to receive pension payments, if you or your employer tells HMRC that you've either started or stopped to receive benefits for your job, if you receive taxable state benefits, or if you claim or give the marriage allowance, if you pay expenses for your job that aren't reimbursed by your employer, or if you gift a charity donation, if you make private pension contributions to a qualifying pension, or if you're subject to the high income child benefit charge. All of these scenarios would result in a change in your tax code, and it's important that if any of those apply to you, you understand why your tax code has changed and what exactly is being applied. In the description, I'm going to give you a link where you can estimate your take-home pay from your gross pay, i.e. you can work out how much tax, national insurance and pension should be deducted, so therefore how much you'll actually be paid. As well as numbers, your tax code will also be made up of letters. In the description, I'm going to put a link where you can find out what all of the letters mean. A standard letter after your tax code is L. And another common one is if you have the marriage allowance or you transfer it to your spouse, you will have an M or an N, depending which way. But if you have a letter and you're not sure what it means, just click the link in the description. We'll take you to this page on HMRC website. And another letter to mention is the K code. So if you have income that is not being taxed from any other source and it's more than your personal allowance, then the K code effectively lets your employer know how much tax that they need to deduct to include this other income as well. So as I mentioned earlier, self-assessment tax return is a completely different system for calculating your tax and national insurance liability, and will be used when your income cannot be taxed at source, such as through the PAYE system. or if you're self-employed, or if your tax affairs are more complex. It's really important to understand that the PAYE system and the self-assessment tax return system are completely separate mechanisms for you to pay your liability for tax and national insurance. And whilst there are some mechanisms to allow transfer of liabilities between the two, for example, on your self-assessment tax return, if you receive PAYE income, you can opt or elect to have it taxed through your tax code. They are separate systems. And there isn't a lot of interaction between the two. So it's really important that you understand clearly your liabilities, which system and how they're being collected, to avoid any confusion or tax to be transferred between the two systems in a way that the tax can't be collected. And if you do, for example, complete a self-assessment tax return and you elect for your liability to be collected for your tax code, it's important that when you do your following year's tax return, that you indicate that that tax has been collected. Otherwise, the system won't know, and it won't be included in the calculation. And therefore, this way, the liability can be carried forward for sometimes a few years before it accumulates and becomes a real issue. So as I mentioned earlier, it's really important that you have a good understanding, if you're going to tick that box, that you understand exactly what will happen, and that you carry the information forward. So as always, if you're not sure about your personal tax and how this information affects you, that you should seek professional advice. And certainly as an employee, there's many free sources of information that you can obtain more information from, individual to your circumstances. And this is just simply a very general overview on the PAYE system, and I hope that it will help you. Thank you for watching, and please do remember to subscribe to our channel. Goodbye.